Assalamualaikum and hi, we are from group 6 and we are doing financial report for Sime Plantation Berhad and BLD Plantation Berhad. Our group members are Imanina Alia, Darshana, Nikno Iza, Kumkahlo and me, Muhammad Fahim Berhad. I will present about main business activity of the companies. Main business activity of Sime Plantation Berhad are the focuses on palm tree planting, fruit bunch milling, crude palm oil refining, and palm kernel industry, and renewable energy. It also manages estates and offers various products like oils, fats, oleochemicals, biodiesel, nutraceuticals, and palm oil derivatives. The company operates globally. BLD Plantation Berhad focuses on producing fresh fruit bunches, processing all palm, and selling related goods. Wheat estates in Lambe, Sawai, Kabang, and Lassa Sarawak. The company operates in palm tree planting, milling, crude oil refinement, kernel processing, and green energy industry.
Good morning, Doctor and my fellow friends. My name is Darshana Kumarasan. My matrix number is 297677. I would like to present about the liquidity ratio of Sime Plantation. The short-term debt paying of the Sime Plantation Berhad shows that 1.25. That means the company has 1.25 assets to pay off its current liability at the end of the year. For the quick ratio of Sime Plantation Berhad shows 0.722. That means the company only have 0.722 of quick asset to pay off its current liability. Now let's look into the liquidity ratio of BLD Plantation, where the short-term debt paying of the BLD Plantation shows 1.43. It means the company has 1.43 asset to pay off its current liability at the end of the year. For the quick ratio, the BLD Plantation shows 1.04. It means the company has 1.04 of quick ratio to pay off its current liability without selling off any long-term assets. The current ratio indicates how the company handle its repayment of current asset and also current liability. The company's liquidity condition improve as the accessibility funds increase with a greater current ratio. As we can see, BLD Plantation Berhad has the higher ratio than Sime Plantation. BLD has healthier organization than Sime Plantation. More current asset available than the current liability. When a company's quick ratio is equals to 1 or higher than 1, it indicates that the company has adequate liquid asset to cover its immediate liability. BLD Plantation Berhad has more than 1. It indicates a good sign. Sime Plantation Berhad does have enough quick asset to meet all the obligations. The company would not face any difficulty when suffer from interruption. For the current ratio, since the Sime Plantation has a lower ratio compared to BLD Plantation, I have a great suggestion where the Sime Berhad Plantation should reduce their expenses to raise their current ratio. They have to examine the budget closely to identify the areas where the business can cut costs, such as labor costs, marketing costs, advertising costs. All this should be fine. For the quick ratio, there are several strategy methods that Sime Plantation may use to improvise their quick ratio. First and foremost, it also concentrated on lowering current liability by settling a long term of payment with the creditors and also the suppliers. It also great way for fulfill the immediate commitment such as other trade payable, tax payable, and also borrowing. That's the main thing that occupy the largest portion in this current liabilities.
Assalamualaikum to Dr. Zulkarnain. I'm Inoisa Bentini Amram. We'll continue for the activity ratio. I will talk about Sime first. To calculate the total asset turnover, we use the formula net sales divided by average total asset and we got 0.68 tons. This means that the company can only generate 0.68 tons in sales for every 1 ringgit Malaysian in average of total assets. Next, to calculate account receivable turnover, we use the formula net sales divided by average trade receivable and we got 7.51 times. This means that the company has converted 7.51 times its receivable into cash this year. Secondly, for BLG's total asset turnover, we got 0.17 times, which means that the company can only generate 0.17 times in sales for every 1 ringgit Malaysia in average of total assets. And for the account receivable turnover, we got 2.16 times. That means that the company has converted 2.16 times its receivable into cash this year. Next, for the total asset turnover comparison, Sime Darby has a higher total asset turnover compared to BLG. It means that Sime Darby is generating more revenue for each unit of its total asset than BLG. But the smaller ratio of Sime Darby also shows that the company is not making as good of use of its resources. Since BLG has a lower total asset turnover ratio, our suggestion is BLG should enhance its inventory management. This is to determine the amount of the time spent moving the goods throughout the process. So BLG should make technological investments to automate the order, billing and inventory system so that the asset turnover ratio and sales will increase. Same goes to the account receivable turnover. Sime Darby has a higher account receivable turnover than BLG. It means that Sime Darby good at handle collecting debt and their customer also pay debt on time without any delay. But the opposite happens to the BLG, causing its ratio lower than Sime Darby. Therefore, for the suggestion, BLG can improve their account receivable turnover by creating strong relationship with their clients. A happy consumer is more likely to pay on time for service and have a lower turnover rate, so that BLG's account receivable turnover will increase. That's all from me for the activity ratio.
Assalamualaikum, and now I will explain about the profitability ratio of Sime Darby and BLT Plantation. So the profit margin on sales of Sime Darby shows 0.13, means that the ability of company to earn a net income is 13% from sales. Meanwhile, BLT Plantation is 36%. The return on common shareholders equity of Sime Darby shows 0.17, means that the company can earn income 17% of employed owners' investment, and BLT Plantation is 12%. So which company is the best compared by the profitability ratio? To begin with, the profit margin on sales is higher of BLT Plantation is higher than Sime Darby, which is 0.36 and 0.13. Higher profit margin journey indicates that the company is managing its costs more effectively compared to other company, such as production costs, operating expenses, and overheads. A high profit margin can also prove that BLT Plantation have a competitive advantage in pricing, cost structure, and product differentiation compared to Sime Darby. Next, return on common shareholders equity. In this ratio, Sime Darby is higher than BLT Plantation Berhad. It proved that Sime Darby Plantation Berhad gets a higher return on income from the owner's investment. A higher return on common shareholders equity journey indicates better value creation for shareholders. It shows that the company is delivering a high return on the equity invested by its common shareholder. Therefore, there is one suggestion for each ratio. Sime Darby Plantation can reduce its costs by identifying areas where the company can cut back on expenses, such as reducing operating expenses, finance costs, and tax expense, or finding ways to streamline your operations. Other than that, BLT Plantation Berhad expanding the company customer base directly help the company increase revenue and improve profitability. BLT Plantation Berhad can do this by targeting new markets, launching new products or services, or improving marketing efforts to reach a wider audience. Besides, improving inventory management can help the company reduce costs and improve profitability. That's all from me. Thank you.
Thanks, Imanina. So now I'm going to present about the data ratio in leverage ratio between the Sime Darby Plantation Berhad and BLT Plantation Berhad. So now we'll see the Sime Darby first. For debt to asset ratio is total liability divided by total assets, which is 0.39, while for the debt to equity ratio is total debt divided by total shareholder equity, which is 0.741. While for BLD, the debt to asset ratio is 0.48, and for the debt to equity ratio is 0.57. So while we make a comparison between this company on this ratio, So for the debt to asset ratio, BLD is higher than Sime Darby. So it means that BLD has a higher level of financial risk. So this is because the larger proportion of its asset is financed by debt, which increases the company financial leverage. And higher leverage can mean higher interest expenses, which can affect the profit, especially during the economic downturn. So I think BLD can improve their debt to asset ratio by managing their asset efficiently, because it can give a positive impact to the data ratio. And the company can save more money, save more cash that can use for the debt repayment by stabilizing its asset base, selling non-core asset, and improving inventory. For the debt to equity ratio, Sime Darby is higher than BLD. It means that Sime Darby is borrowing more capital from the market to fund in its operation than BLD Plantation Berhad. And higher debt to equity ratio indicates that the company relies more on debt financing. Higher ratio make the company more vulnerable to economic downturns or fluctuation in interest rates. This ratio also shows that the Sime Darby Berhad can magnify returns as it can measure financial leverage, but it also amplifies risk. So based on the debt to equity ratio, Sime Darby can improve their ratio by increasing its equity, by retaining the earnings, publishing new share, and seeking to attract more investors. So by increasing the equity, the company can decrease its reliance on debt financing, thereby improving the debt to equity ratio. So that is the end of our presentation. Thanks for watching. See you soon.